So I'm going to give you 2 unbelievable tips that will help you as a trader or as an investor to manage your positions. It's all psychological. It all comes down to one huge factor that we often forget: risk. These tips will be able to help you as an investor or as a trader be comfortable within that position. These tips will also allow you to be in full control of what is happening in this position. And most importantly, these tips will enable you to not lose all your money in an event of an investment rug pull or a liquidation if you have gone a bit too heavy on that leverage in a bad entry. So let's jump on the screen. Let's go through it, because I think these are very, very underrated. So we're on the screen. Hello. A little bit of a filler noise for you, a bit of polka dot, 5-minute time frame, but that doesn't matter, right? We're working on a little trading strategy at Learning Crypto to enable you as a system to day trade, and it's going to be the pillar point of this video in terms of risk management. We're going to show you 2 very clear and obvious things that a lot of people, we feel, are not applying when they come to us and they want to learn more. There's a lot of things going on in the market, and it's not great. A lot of people are telling people to increase your leverage. You can do that. That's totally fine. We often say leverage is fine if you know how to use it. Another thing is increase your debt, borrow money, invest with other people's capital. Please don't do that. Matty's financial advice. Don't do that. Do not borrow other people's money. Do not max out your credit cards. Do not do all that kind of stuff with the whatever you can do these days. Don't do it. Jesus. Let's talk about the obvious, right? Rule number 1, tip number 1, and this is absolutely vital, please. You need to backtest everything you are doing. Everything. You need to know if a strategy works. We teach you a full backtesting method on our courses, but I'll give you the quickness of it, right? You need to go through the entire structure of a chart, depending on the time frame that you're on, to see if what you're looking at actually does signal and work in the same way that you want it to. So if you go on, say, this chart here, 6-hour time frame, let's just say, for simple line's sake, we'll remove that for now, and let's just say this is all random knowledge, random stuff. Let's just say if you want to use, say, the MACD, just random. You wanted to use a MACD to enable you to see positions, whether it's a divergence, whether it's a, the crossover, or the histogram, right? You want to see that within the confluence of the time frame that it is going to work. Some methods don't work. Some methods do work. You want to pick the ones that do, then refine it to your taste, to your style, right? So let's just talk about the most obvious here. We're going to use, obviously, the histogram alongside the EMA on the chart, which is currently the EMA 21. What we want to see is when a signal goes positive, does the price react to it? How many times does that happen? Is it likely you are going to get more momentum, or is it unlikely you're going to get more momentum, right? Obviously, there's 55 gazillion different indicators out there, but you get the idea. The more testing you do, the more information you've got, the more likelihood it's going to work. And then, wait for it, you can trust it. More you trust, the better it is, because you are working on a degree of probability. The probability is, and to the people at the back there, I'm going to say this, to the people that comment on your Twitter, on your YouTube videos, etc., going, oh, it can go anywhere, it can go up, down, left, right, no one knows. Well, obviously, that's the whole point. It's speculation. It's why you trade, right? If you feel the data is in your hands to go long or go short or no trade, do it. You need the data though. So in this instance, you can see a nice big momentum push to the upside due to a crossover here, but also the histograms as well as the EMA. So it's not too bad. It's change trend essentially, right? Going back as well, you can see where all the big drops are. What you're looking for is a confluence of certain things. Whether you are looking at a high rate level on the right hand side there with the histogram up to 0.3, that's relatively high, right? Because there's been a big move beforehand. Obviously, you can see what's happening here. The downtrend is obviously ensued. That could be a possible swing trade, right? Just to give you an idea, I'm not going to go too deep in the backtesting. If you are interested, check out our premium. We are looking to develop and build and give you some nice little systems to help you day trade. We already did one for like swing trading for beginners. It's called Earn While You Learn. That works very, very well. But we're going to increase the edge a little bit for a bit of fun. So feel free to check it out. It's only £10 a month, right? It's pretty freaking awesome. So let me write all this down so you can see it. Tip number 1, you need a back test, right? If you know what you're going into, so you got to think of it like going to war, right? If you've done your research, your little bit of information, and you've mapped out a battle plan, you know exactly where you're going, you've wrecked the area, you know exactly where the doors are, you know how to get out, you know how to get there, the quickest route, all that kind of stuff. Same as trading, right? Same as trading. More you know, the better it is. It's like going to a football match, right? Everyone does this. Go to an away game. Where's the nearest Mackey's? Where's the nearest service station? Where's the nearest this, that, and the other? Where's the car parking? How much does the car parking cost? If you put it all related to your life, backtesting becomes easy, right? So I hope that helps. Number 2, the most obvious clear number 2 ever. Not a poo, sorry, but number 2 is very clear. It is, wait for it, drum roll. Percentage risk. So this is the thing that ties it all together. If your backtesting data is spot on, if your percentage risk is always the same every single trade, psychologically you have an edge. Why? And I'm going to give you a little bonus tip at the end of this just to kind of make it all beautiful. Because if you are only risking 1% of your entire account on a trade and you lose, it's fine, isn't it? There's always another one, because guess what? The reply guys are going, well, could have went up, it could have went down, could have went sideways. You get the idea. It's speculation, it's probability. You might be a trader or an investor, high risk, high reward. Or you might be low risk, high reward. Or you might be low risk, no reward. Because you just did it wrong. So you got to look at that situation, right? There's different types of risk profile. But if you are trading, higher time frames, higher leverage, you need to have that low. If you're a swing trader on the higher time frames, you're using less leverage, you can probably up it, obviously. If you're an investor and you're a degenerate meme kind person, your probably risk has got to be very, very low too, because you're not going to make money all the time. Yes, there might be the success stories, don't get me wrong, obviously, but for every success story, there's probably 1,000 coins that are not. So bear that in mind. So set up a trading system that you are risking only a certain amount when your stop loss is hit. You have to use a stop loss. If you're going to go really balls deep, percentage of it, no stop loss, liquidation. Let the liquidation do it. The liquidation on a 1% is fine. You're not going to lose your whole account. You're just going to lose the entire position. If your position is 1%, that's fine. Or you can increase the risk profile and have a stop loss, which is then at 1%. So it's either or, depending on your trading strategy, because you need to build one. So let's talk about the most obvious thing as well as the bonus tip. The bonus tip is on the screen. Forward testing. What is this? Testing it in real time. Whether you are paper trading, whether you are just putting $50 in the exchange and using that to test in a real market condition. It's basically a risk management sandwich, let's be fair here. So you need a back test first. You need a back test to see if it's working. You need to then have a profile that fits your style, whether you are on the lower time frames, lower risk, higher leverage, whatever, higher time frames, lower leverage, a bit more risk to it, right? Because swing trading, you can do that. Forward testing, you need to put it all together to see if it genuinely works, really works, right? As I say, we are looking to build a day trading system. The team are already kind of playing around with a potential idea that I've got that I'm looking to do myself for a bit of fun. We shall see how it goes, but it will all have these little pillars in it, pillars in it, because it makes clear and obvious sense. Most people don't understand the middle part. They will have an account, they will blow it up because they try and do 20% on a trade. If you lose 20% risk on your entire trade, that's 20% of your entire account gone, blown. Needs to be low. Then forward testing. If it matches and it works, guess what? Time, consistency, let it happen. If you lose, you lose. If you win, you win. If you've done 100 trades in 6 months, say, for example, random number, and say 40 of them win, but you're winning way more than you're losing, you will make money. It doesn't matter. You can't be 100%. No one ever is. So if you enjoyed this video, yeah, leave a like. It does help. More from me will be coming on here for education. Enjoy.